Go to economic growth. When we talk about economic growth, we're talking about a country's GDP. And when you talk about a country's GDP, they said gross means the total. The gross means the total. Output is what we produce. The product is what we produce, which is output. And the domestic there is about locally. So the value or the measurement of what is being produced in a country is called the GDP. So the measurement of a GDP brings us to talk about the national income. And for the national income, whatever output is being produced is what comes in terms of monetary figure. So if 20,000 output have been produced, 20,000 will come into the business, into the economy. That is circular flow of income. Then we go to the methods of calculating GDP. We said to calculate the GDP of a country, we need to understand each value that has been added for each production. So it is better to calculate for any production, it's better to calculate at each stage of the production. Like if you have to produce a car, you start calculating from when the raw materials for that car has been purchased. So you calculate added value at each stage of production. Then we go to the second paragraph. It said the income method includes all the incomes which have been earned in producing the country's output. The transfer payments such as pensions and unemployment benefits are not included. This is because there is no corresponding output for goods and services. So when you are prepared for the national income, you don't calculate the transfer payments. Why? Transfer payments are more like payments that are being given to expenses from governments to those who do not participate in any activity. They are not workers. They are not actively engaged. So like they said, unemployment benefits, pensions. These people are not working anymore. These people are economically inactive. So you don't calculate it as part of your national income. It is not part of the national income because they are not producing anything. That's why I call it transfer payments. So transfer payments are what? Amount of money or income from one group or another that do not come with return for providing a good or services. So it only happened because they become the beneficiary to that amount based on the fact that they are inactive. Do you get what transfer payment is here?
Yes.
Income that is being received by those that are not economically inactive.
Economically active.
They are economically inactive. Pensions, pensioners, unemployed people, they are economically inactive. So whatever they get is called transfer payment. It's not part of the country's national income. I think it's clear.
Yes.
So the expenditure method calculates GDP by adding up all the expenditures on the country's finished product output. Some of this comes from foreigners when they buy the country's exports. Some of the expenditure in the country goes on imports, which are not produced in the country and which do not generate income for the country's citizens. So in the expenditure method, it is necessary to add exports and deduct imports, which we call net exports. So total expenditure on the country's output and hence its GDP includes consumption, investment, government expenditure, and net exports. Do you get the point? I will explain again. When you are calculating the method, when you are calculating the expenditure, when you are using the expenditure method to calculate your GDP, that means you want to calculate the GDP of a country using the expenditure method. So what are those things that are involved? What are the items in the expenditure method of a GDP? The first thing is consumption. So you have to include consumption, which is the total amount of money spent by households. Investment, the total amount of money invested by firms is part of your expenditures. Government expenditure on maybe infrastructure, whatever it is, you have to add it to it. And export minus import, which is your net export. So GDP is what? C plus I plus G plus X minus M.
Yes, sir.
Do you get it? Consumption plus investment plus government expenditure plus X into bracket minus M, which is plus net export.
Export minus import.
That's net export.
Yes.
Is it clear? So that is the point about calculating GDP. Any question about that? C plus I plus G plus X into bracket plus X plus X into bracket plus open bracket X minus N.
Or net
Yeah.
Yes.
Clear, right?
Yes.
So go to nominal and real GDP. So they say when government calculates GDP, then they usually first measure it in terms of national GDP, which also refers to as money GDP or GDP at current prices. Nominal GDP is GDP value in terms of the price operative at that time. So we call it nominal GDP because it is the value of the GDP. It's the value we get with the price as at now. The price of goods, the price of output, present output is what we call nominal GDP. The price of output that we get. You know, you are going to sell, right? What you sell comes back in terms of the GDP. So you are selling at the present value. So the nominal GDP means you value the measurement of the present value of goods produced in that country at that point in time. That is nominal GDP.
Yes.
So they said, in terms of prices operative at that time, it has not been adjusted for inflation. So for this reason, nominal GDP figures may give a misleading impression of what is happening to the output of the country over time. For example, if prices rise by 20% in a year, there will be a 20% rise in nominal GDP, even if output does not change. So to get the real picture of a country's GDP and assess its economic growth, economists adjust nominal GDP by taking out the effects of inflation. They do this by multiplying nominal GDP with the price index in the base year, divided by the price index in the current year. This gives a figure for GDP at constant price, referred to as real GDP. So just get this point. There's real GDP. Real GDP is GDP that has been adjusted with inflation. We have nominal GDP, which is GDP at the current price. There's nominal GDP.
Yes.
This nominal GDP is that it means GDP has not been adjusted. It means GDP at the present price value. So whatever that has been produced in this country, the price at which they are being sold without thinking about inflation is our nominal GDP. It has not been adjusted. But this nominal GDP would give a misleading figure or misleading impression about the economy. For example, if figures about inflation has not been adjusted and there's an increase in price, there's an increase in price in the economy. So an increase in price in the economy will increase the GDP, yes or no? Because output will not increase, but the measurement of the output would have increased.
Yes.
Are you getting what I'm saying?
Yes.
Output in this country with the present price value is nominal GDP, but it can be misleading because if prices have increased and it has not been adjusted, if prices you produce 20,000 outputs, it was supposed to be $5, which means you are supposed to get 100,000. But there's an increase in price to $7. So the output will become 140,000.
Yes.
But output does not increase. So you would think the economy is doing well, but the economy might not be doing well because it has not been adjusted based on what is happening with the present situation. So nominal GDP can be misleading because it has not been adjusted with changes in prices. So you would think your economy is making progress. Your economy figure is high, but it's not high because it does not reflect in the output produced.
So nominal GDP is not accurate.
It's not accurate. That's what they said. It could be misleading, especially when it comes to pricing. So you need to measure a country's GDP. You need to measure a country output based on the real GDP, where you would have adjusted it with inflation. So to adjust it with inflation, they said you do what? It will be you multiply the nominal GDP multiplied by the price index in the base year, in this present year, divided by the price in GDP multiplied by the price of the base year at the beginning of the year or the last year, divided by the GDP or the price figure of the present year.
So it's GDP.
Nominal GDP
Yes, the nominal GDP.
multiplied by the price index of this base year divided by the price index of the current year.
The base year in 40. Yes.
Do you understand?
Yes.
Nominal GDP multiplied by the price index of the
base
last year, of the base year, divided by the price index of the current year. That will give you your real GDP. So real GDP means, if real GDP means that GDP has been adjusted with inflation. I think it's clear.
Yes.
All right. So we go to real GDP per head.
Yes.
Nominal GDP multiplied by price index base year divided by price index of the current year. Clear?
Yes, yes.
So we go to real GDP per head. A rise in real GDP means that more goods and services have been produced. Its impact on the goods and services available to people will depend on the state of population. If real GDP increases by 5%, but the population increases by 8%, there will actually be fewer goods and services per head of the population, and people's living standards will fall. If real GDP increases in an economy, it means output has increased in that economy. But we have to understand that if real GDP increases above the population, it is good. That means a lot of goods will be available for a lot of goods will be available for consumers. But you don't get my point.
And then you'll be like human index. There is a human.
Listen, human index.
Yeah, HDI.
HDI, yeah, Human Development Index. It talks about the living standard.
It's not related.
It's related. We'll talk about it. Yeah. But listen here.
Yes.
We talk about real GDP per head. Real GDP per head is real GDP divided by the population. Please write it. Real GDP per head. Real GDP per head. Per head or real GDP per capita is the same. Real GDP per capita.
Yes.
Is equals to
yes.
Real GDP divided by population.
That's it.
Yeah. Okay. So if real GDP of a country increases, it means output would have increased. But it does not mean that individuals will be able to consume. That means each individual will be able to consume what they are supposed to consume. So that will depend on the population of that economy. So if real GDP increases more than the population of a country, that means if the output increases more in terms of percentage than the population, then the living standard will improve.
But if the income increases,
if population increases more, if the percentage of population increases more than the real GDP, the standard of living will fall because goods or output will not be enough for the population.
But what if some people have more income than others?
We're not talking about income. We're talking about output of an economy.
Yeah, that's like outside the box.
Yeah, so here we're talking about what each individual within an economy can consume.
Yes, I'm getting it, yeah.
We're talking about real GDP per capita. We have the population. So for each individual, what quota, what part of the output can this individual have for him or herself? That's what we're talking about. We're not talking about the amount of income the individual has.
Yes.
So we're talking about output based on population. So if output increases more than population, living standard will increase. If output fell more than population, living standard will fall. That is the point there.
Yes.
So we go to the difficulty of measuring GDP. Are you there?
Yes.
So they said GDP figures tend to understand the true level of output. This is because of the existence of unrecorded economic activity, both legal and illegal, and non-marketed goods and services. There are numbers of reasons why economic activity goes unrecorded. So it's difficult for us to measure. It's difficult for us to measure the real GDP because there are some things that are not recorded. There are some businesses we do that nobody knows, and there's exchange of goods. There's money has been exchanged without any record, without any trace, legally or illegally. And they involve the money used in the company. they involve the same money in circulation.
Yes, yes.
So money would have been used for something that has not been recorded. So money has changed out, but without a record, without a track, without a trace. That is what they are saying here. So one is that the activity is on a small scale and there are relatively high costs of registering a business. And the first one is one of the reasons why it's difficult to record all transactions or outputs in an economy is that it might just be a small transaction that if you have to go through records, the cost of recording it is high. Then you just ignore it. You escape it. You avoid it.
It's not worth it.
It's expensive.
Yeah.
So you don't want to put it on records so that government will have those figures because it's expensive to do it. So people will not record some transactions because the cost of recording them are high when you consider the figure involved in that transaction. Do you get the point?
Yes, sir.
Another reason is that the activity is illegal, such as illegal drug dealing and work undertaken by immigrants who have not been given permission to work in that country. So illegal immigrants, they don't have records. Drugs, they are illegal. So these things will not go through the government, through government records. So it will not be recorded. Yes. So they are, we call them unrecorded transactions.
Yes.
Do you understand?
Yes,
so we don't have trace for them, but it involves money that has been produced in this country. The activity may be, the third one, the activity may be legal, but the person undertaking it does not want to pay a tax on it. So some people want to avoid tax. They do legal transactions, they do legal businesses, but because they want to avoid tax, they don't register their business.
How is that?
It's possible.
I mean, it's legal, but doesn't have that.
They do legal activity, they are not doing drugs.
Yes, yes.
They are not illegal immigrants. But for the fact that they want to avoid tax, they do not come up, they do not record, they do not register their business. Their business is not unknown to government, to the economy.
I guess, yeah.
Because if it is known, they have to pay taxes, but they don't want to pay. So it is a non-recorded economic activity because of tax avoidance.
Just because the business doesn't have license. Or no,
yeah, they don't have anything that would trace them to make them to pay tax.
Yes, yes, I get.
In the UK, it is thought that some workers in building, electrical installation, plumbing, and car repairs do not declare all their earnings to the tax authorities. Some employers may want their businesses to be in the informal economy, so they can avoid government regulations such as having to pay the national minimum wage. So a lot of businesses, especially personalized businesses, they don't declare their total income, because if they do, they have to pay tax based on that income. As a result, they don't want to declare. Do you understand? So that means government is not getting the accurate figure to base its national income. So the size of undeclared economic activity is influenced by a number of factors. This includes one, the number of activities that are declared to be illegal, tax rates, penalties for tax evasion, and government regulations. So these are factors that decide or that determines undeclared economic activity. One of them is the amount of tax that has to be paid, the regulations on taxes, the fines on taxes, the tax rate itself, the definition of illegal, what illegal means to government. All these things will determine if a business will declare or an individual will declare its or her income or not, to be able to pay tax or to be able to do it right or not. Clear?
Yes.
So now we start. They said the existence of undeclared economic activity, besides understanding the output produced through GDP figures, has a number of other factors of effects on an economy. It means that tax that the official inflation rate overstates it means that the tax revenue is below what could be collected. It can also mean that the official inflation rate overstates the rate at which the general price level is rising. This is because prices charged in undeclared economic activity tend to rise less quickly than in the formal economy. because they are undeclared economic activity, we won't be getting accurate figures. So it's either we are understating or overstating the figures that are declared in terms of real GDP. Do you get the point here?
Yes.
So there are also non-marketed goods and services. These are products which are not bought or sold. Family members who produce food for their own use, including in subsistence agriculture. People who clean their own houses and repair their own cars are all providing products, but these are not counted in GDP. You get, for subsistence groups, they do things themselves. They use products to do it, but they don't declare, they don't pay for carrying out those services. Service is carried out in that economy.
Yes.
That is not recorded, that is not traced, because those services are rendered by family member. Oh, I could barb your hair because I'm your brother, and you won't pay me for that. Yes or no?
Yes, yes.
But it's an economic activity that has to be recorded because electricity was used, clipper was purchased.
Yes, I get it.
That is the point they are making there. Is it clear?
Yes.
So we go to recession. Are you there?
Yes.
So when we talk about recession, we're talking about decline in economic activity for 2 consecutive quarters. Like 2-6 in a year, there's economic decline in every 6 months consecutively. That is recession.
6.
That means economic activity are falling down for 6 months consecutively. That's in a year.
2 times a year.
Do you get it?
Yes.
So a recession occurs when real GDP declines over a period of 6 months or more. This time period is also sometimes referred to as 2 successive quarters. It is a period of negative output with less being produced than in the previous periods. What are the causes of recession? Just as economic growth can be caused by an increase in aggregate demand or an increase in aggregate supply, the recession is caused by a decrease in aggregate demand or a decrease in aggregate supply. So there are numbers of reasons why aggregate demand may fall. These reasons are sometimes referred to as negative demand side shocks. For example, consumer expenditure and investment could decline due to a fall in business and consumer confidence arising from a global finance crisis or falling house prices in the domestic economy. So the government may cut back its spending too much and net export could fall as a result of rise in the exchange rate. So there's recession, which could be as a result of a fall in aggregate demand or a fall in aggregate supply. So there's a fall in aggregate demand because consumers' confidence in spending has fallen. So they are scared to spend based on economic crisis. So people don't want to spend, they want to keep because they don't know what could happen in the future. People are losing jobs. Unemployment is increasing. As unemployment is increasing, demand for goods and services would fall. So firms would have to adjust. So all these things comes about recession. And at the end of it all, there will be a rise in the exchange rate. Because there's no money will not be in circulation.
Yes.
And as exchange rate increases, the price of export would fall too. The country becomes less internationally competitive. So these are causes of recession.
Yes.
So a decrease in aggregate supply is a negative supply shock, could result from a rise in fuel or raw material costs. So for aggregate supply to fall, it could be as a result of a fall in cost of raw. So for the decrease in aggregate supply, it caused a negative supply shock. This could be as a result of an increase in cost of fuel or an increase in the cost of raw materials. So this will increase firms' cost of production, which will make them to want to produce less. Do you understand? Yes. So if that means their aggregate demand and aggregate supply will shift leftward because cost of production has increased for them. They will be running at a loss if they continue to, because they might not be able to sell, especially if the demand for their price is inelastic. If it's elastic, so they won't be able to raise prices. As a result, they'll produce less. And that is a decline within the economy because output will fall within the economy. So that's about that. So let's talk about the consequences of recession. So with lower output, unemployment is likely to rise. The reduction in output and incomes will be expected to lower living standards. Investment, including from foreign multinational companies, is likely to be discouraged, which will endanger future economic growth. Tax revenue will decline, while government spending on benefits may be increased. This would increase any budget deficit or reduce any budget surplus. The effect of the price level will depend on whether the recession has been caused by a decrease in aggregate demand or a decrease in aggregate supply. So, based on what they are saying here, the consequences of recession is this: a fall in economic activity will increase unemployment. And as soon as unemployment increases, output will reduce, income level will fall. The living standards of people within the economy would fall. Multinational companies would not be encouraged to come to such economy because who will buy from them if they are producing? No money in the economy.
Yes.
So at this point in time, tax revenue from government would also fall because people will not be paying. They don't even have job. How would they pay income taxes?
Yes.
Businesses are not making profit. How are you expecting them to pay corporation taxes? So government revenue will fall through taxation. As a result, government spending would increase because a lot of people will be out of job. So government would start spending on unemployment benefits. Do you understand?
Yes.
So the price level would rise or fall, which depends on what is the cause of that recession. If the cause of recession is based on aggregate demand, then prices will fall.
Yes.
If the cause of the recession is based on aggregate supply, prices will increase.
Yes.
So we stop here.